What's up, YouTube? It's Dakota back with another video, another weekly trading review. Today, going through the week of March 27th through the 31st of 2023. If it's the first time hopping on one of these videos, what I basically do is just review my trading performance of the previous week and see what I can do better for the following week. Let's get into it. First, I took 8 trades. I had 1 winner, 7 losses, 2.05R multiple, and a minus 1.5% gain. Now, this week, I actually finally broke the 3-week losing streak. So, finally got a winner, got that 1 winner in out of the 8 that I took. But it was still good, trading weight. Kept my losses low, was able to manage my risk properly, and uh, everything was good. Let's go ahead and continue. First day thing on Monday, AUD USDs, first trade. Why did I take this trade? Viewing a daily continuation, looking for a fractal setup within the continuation. This is actually the trade I talked about on the last video that I was planning to take for this week. How did I execute the trade? Limit activated and my SL was hit. How could I have done better on this trade? Notice volume exceeding bearish candles on bullish movement to get earlier close. Now, the volume on early exit is actually something I'm working on. It's not something set in stone. I got to figure out how to work in volume more into my management phase of trading. I got it down for the entry phases and really down for the exit phases. I don't have anything written down for the exit phases, so I guess I still got to work on the exit phases. All right. Um. With volume, but had a minus 1.06R there. Next trade, GBP USD. I had a corrective formation at the 50 fib level in a key H1 level 1.2261, followed by a 3-bar JCP for entry. How did I execute the trade? A manual entry, and I'm not supposed to manually enter on Monday. If you remember from last week, I had 4 goals set for this week. Only to take perfect entries. That means no early or late entries. Only waiting for my limits to be activated. And then no more than 1 A+ setup in a row. Same equity level for all accounts. No manual entries on Monday or Thursday. And that is the one that I messed up on, taking a manual entry on Monday. Right. So just had a fear of missing out. Wasn't sure if that setup was going to still be there the next few days, or if I would get a valid entry signal the next few days. But taking that ultimately ended up in a loss. How could I have done better on this trade? Just not taking it because I'm not supposed to take trades on Monday or Thursday. Now I did the same thing on Monday again, right? I took another trade once price reached daily level, 61 fib level. Same thing, just fear missing out on that same trade. It's the same exact trade, so we're only going to review one screenshot. First setup that I took was off this bearish candle right here. Was looking for that sell, hitting those lows, and then the next chart I took was on this daily level after this shooting star that happened off that daily level 1.2285. All right, and price just continued just scaling up, scaling up. Next on Wednesday, why did I take this trade? I had a 5-minute descending channel, had broken and retested within the H1 bullish flag. So really playing off the bullish flag, and then within that bullish flag, a 5-minute descending channel that I was looking to execute off of. And this is actually my favorite setup to play off the descending and ascending channels. Um, how did I execute the trade? I manually entered on a test of the channel and manual exit after level did not hold. How could I have done better on this trade? Waited for the lows to be taken out to complete the pattern despite the pattern high being broken. I was impatient. All right. So had this descending channel, and what I typically like to see on these setups are 2 lows being created and then those lows be taken out. And once that low is taken out, I'm looking at the next leg after it's been taken out to break the high of the channel, the high range of the channel, and for price to continue up to the top of the channel. Now, I noticed that the lows were not broken, but I saw that the high was broken, the high of the range was broken, and I decided, hey, let me go ahead and take it without waiting for that low to be taken out. Because this was a setup that I need to be on the chart for, so it kind of takes a while. I have to sit on the chart and wait for it. Um, Needs to say, simple thing that I could have done is just say, hey, let me just come back an hour or two later to see if the lows are broken. Once the lows are broken, then I can come back and uh, actually check for my legitimate entry. But I didn't do that. I went ahead, manually entered off the first break, and price continued pushing down. Had minus 0.88 R there. Next trade, GBP USD, same general idea. I still stayed up for the trade because I noticed it wasn't working. I needed to get a better entry on it because the overall idea was still valid, but the trade just didn't work. So why did I take this trade? Consolidation at the bottom of the bullish flag created a liquidity pool below the lows. This happened while price was above daily level 1.2285. How did I execute the trade? Entered manually, had a fear of missing out, and my SL was hit. I waited for the lows to be taken out and for the actual bullish signal to occur. Is what I could have done better. So at this point, after the descending channel didn't work out the way that I wanted to see it work out, I switched my analysis a bit and looked at it as in a Wyckoff viewpoint, and that's the new concept that I'm basically studying. I saw that available here, and I went ahead and marked it up there. And what I'm supposed to do is actually wait for price to break down like it did here, and then look for an entry for price to continue pushing up. Clearly didn't. I just waited. I saw price broke those lows, but it failed to break below them, and I was like, okay, let me enter here. This is my time. It's now. So I entered. Went ahead, set my entry there, and set my target at those highs, and price just kept going down. Needless to say, what I'm supposed to wait for is obviously that spring to the downside, but I didn't do that here. But I gave myself a third chance on the idea and went ahead and entered the third time. And this time I actually did what I was supposed to do, wait for that candle, for this candle to actually happen, this exhaustive candle here. And uh, and for price to continue up. Now, let's go ahead and put that to the side. Let's go ahead and read this. How did I execute the trade? Manually entered based on volume and exit arbitrarily above the target. Now my target is actually this high here. And once price got above that high, I went ahead and just exited. I did extend my targets a little bit higher, but I was like, hey, my target's hit. Let me just go ahead and exit the position. How could I have done better on this trade? I waited for the setup to occur instead of taking two early entries. The first entry was based on a different idea, but nonetheless, it was still early, even for that idea that I was trading. Look to add on retest at the bottom of the range, which what I'm talking about there is after price gave me the spring here. Once price got back inside the range, there's a slight pause and test at the bottom of the range that I like to add on. I like to get back in on. But if I were to enter off of that, there's not a real place for me to adjust my stop and actually add more size to the position with the same stop limit. Not stop limit, but risk size. So I have to actually add risk here because I would keep my risk or my stop loss at the same level. I wouldn't move it below these lows and I wouldn't move it to break even. I don't move to break even just for any reason. I move to break even once levels have been broken, uh, and it makes sense to do, and it makes sense to move it there. Um, and those are the trades for the week. Now let's get back down to the review. For the review, did I accomplish my goals from last week? And my goals for last week were to only take perfect entries, no more than one A plus setup in a row, same equity level for accounts, and no manual entries on Monday or Thursday. So first one, no, I had two early entries. Those were on GBP USD. The A plus setups that were not applicable this week. I had no A plus trades. And same equity level on all accounts. Yes, I did that. That was pretty easy to set up. And then no manual entries on Monday or Thursday. First trade, second trade I took failed that because I took a manual entry on Monday when I'm not supposed to, or agreed with myself that I'm not supposed to. So what I went ahead and did is just set the same four goals for next week, and probably have these same goals for the rest of the month, just to ingrain it into my brain that hey, this is how I want to trade right now. So getting the habit of that right now, and this will probably be up for the next 4 weeks. So two ideas for next week: US 30 price 32.92 6.8. Why? If price breaks 32.92 6.8, it will be a sign that price will continue its uptrend that's been on for the past 2 weeks. If it fails there, it will likely be a sell signal. Let's go ahead and bring that up. So what I'm looking at is just this daily level, looking for this previous high to be broken and potential retest below the level. And if that happens, I'm looking for price to continue up to 33.57 5.4. If price fails that and gets back below 32.76 6.9 and potentially below this low, which is about 32.72 0.6, I'll look for sales in short-term sales because the uptrend wouldn't be completely invalidated at that point, but there may be a short-term sell signal that's available there. So just have to wait to see how the market reacts to this area. Don't expect it to stay in here for too long. So looking for a breakout on either side. Next idea that I'm looking at is Euro USD at 1.0, 1.0929. Why? If price breaks above 1.0929, there'll be an opportunity to buy up to weekly level 1.1032. If price fails to close above 1.029, there will be a sell signal available to ride down to 1.0759. Now I'm leaning to the long side, to be honest, because we've been in an uptrend for the past 5 months since October of last. That's the wrong thing. Since October of last year. Um, So looking for this high to be broken and looking to ride up to this weekly level. If we get up to that weekly level, I am looking for price to actually break this high here and continue up further. There's another high up there that I'm looking for price to reach to if it does break above there. And then if price breaks below or fails at this level here, I'll look for a short-term sell back down to 1.0759. And that is my weekly trading review. Hope you guys enjoyed the video. If you have any comments, questions, go ahead, comment in the comment section.